So we were heading towards Wednesday. This is Tuesday high. So far we were from Asia to London. We've been just expanding higher. Um, we haven't rated the lows from Asia, and we're just expanding higher. In It's 9:10, and we still have a buy side liquidity target to be rated. 9:30 euros, sweeping the lows from pre-market, but you haven't rated London lows. Trying to go below this low set at 8:30, failed to do so. Seeking for opposing liquidity pool. Rated the low, no body, no change in the state of delivery. You're still trapped above this, inside this high and the low. Once this high is taken, turtle soup, we can enter sells. Displacement, closure above it, I don't want to see that. This high 1050 might be swept again. I want to see if I close this position or I can resell again of the high. Sell again and sell again. One more time. This low I want to see with the body. There you go. Hourly chart. Now I have my standard deviations. And I want to target all the sell side liquidity because of the profile that I'm at right now. If we think about it, this is another short opportunity. We created an efficiency right there. Once the highs are broken or rated through, and we tag the sell side liquidity, and we're entering back inside the range, we can go to an hourly chart and we'll notice that in here we have an inefficiency. We tagged it, no body above it, so we're fine. It'll mean continuation to the downside. We can add another short right there. We're targeting this low right here, and once this low is targeted, this low will come, and this will be done by Friday because of the profile that we are under, which is the Wednesday high of the week. In this particular profile, it's scripted that Wednesday it's the maximum range, or it's where the range is created on the upside, meaning that that's the highest that it'll go, and from there you just have a displacement to the downside, which once again is this image. On Monday it's here. You create a retracement, You create a high up to Wednesday, and from Wednesday you sell up to Friday. With conviction, based on our standard deviations and based on this down candle that it's going below the open of this candle, this is a shift in market structure. The fact that you rated all this liquidity, so all these lows, and that you close with the body below it, it's indicating you that this wick that it's coming into this retracement is stepping this order block to continue selling to this low and this relative equal lows that are too clean right here. Based on our standard deviations, it'll go to this low. So if we drop to a 15 minute or a 5 minute and we continue playing up to Thursday, and we can continue playing this game. So first target is met on a 15 minute. uh, on the hourly chart we have we're broken below 1 into 1.5 standard deviation. Let's see, we have a break, a gap, a volume imbalance right here. See if we get there. Does not need to. On the hourly chart we have a low here, and this is Asia. Let's do it up to 11. Let's go back to a 5 minute. You're right in the low. Okay, in this candle there's a low and a high. I want to target equilibrium. Equilibrium will be close to where we at right now. Midnight price open or midnight opening price. I want to see the opening price, and that's 15,883 and 3/4, and extend that up to 11. I still have the inefficiency here. It does not need to be traded through here, since we remember that this high is nested with equilibrium. I'm gonna extend this line up to 5, and from 2 to 5 it's my Asian range. This is the low from London, I'm sorry, Asia, or the Asian lows, and this is the high from 9 inside Asia. Let's see what the algorithm wants to do first. It's seeking buy side liquidity and rating the high. A high has been set at 2, and you're in premium of the fair value gap on the hourly chart. Now you're inside the range below midnight open. This high does not need to be traded through, since on the hourly you're still in a continuation, this will be just a retracement to continue below this sell side liquidity. It can even retrace once again to this range. So now the candle that will be formed here will have a high, and this low will form your next move to the internal to go to external. Meaning that if we go to a 15-minute, right, we can sweep liquidity and then come back up and then drop again, something like that. You see? And then continue. Okay, so let's see what we get. So the low has been rated, and now it seems to be targeting or looking for this sales and liquidity, unless price is gonna be stopped by this down candle up to for a moment, right? Okay, you rated the low, then this concept is didn't work. You're rating lows, and then you just skim back up, retrace, and then you create a lower low. This is 5 in the morning. So this is your Urus from London to the liver, to the downside during London. So now, so far, you have this swing point from 2 to 5. Equilibrium is right here. We already rated this low, and we already rated this low. Algorithm can do this and continue. Can do this and continue. Why here? Because this is midnight open, and then continue. Why here? Because this is 50% of the range created. You want to trap people or early shorts. So there's people that see this short setup. There's people that think that because it's going up, the market's gonna go above here. So you want to trap both of them early. What you do is you fake out or you fake them out. Price continuously it's grinding higher and higher. Create a low right there. 15-minute for valley gap, and then you expand higher. 8:30 you have some sort of news. In this case we had unemployment claim. Yeah, this is Thursday, unemployment claims, and we set a low, or we start pushing lower, and the idea will be invalidated once you have a full closure of a body with below that low. If not, price can literally come back into its midnight because you have an inefficiency here, and then from there in trap. Let's see what we get. You have a low that it's rating. You see, sell. You're coming back to the inefficiency above. This quote unquote continuation to the downside is to trap early shorts. And this move up, it's to trap longs and people that think that this high will be attacked. And from there, boom, 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 boom. There you go. First target's met on a Thursday. Same logic. and here's 11. So first target's met, objectives cleared. Now we have an expansion with the body on an hourly chart below 2.5. Immediately as I explained on this side of the market, that means immediately expect prices below 4 and between -4 and 4.5. So 50-minute chart, 11 a.m. Dealing range created during New York, this high and this low, equilibrium right there. 5 minute, do we have any inefficiency? Well, we have inefficiencies here. 90-minute, also an inefficiency there. 1 hour, also a little tiny inefficiency there. Let's go back to 15, see what if we get up there. Seems like it doesn't want to, it just wanted the first inefficiency, which is this one right here. Mark 50% of it. That should be your second short opportunity. Now continuation. Forget about even this one. If it's truly bearish or truly bullish, so if the chart is flipped, if it's truly bullish, you should use this one instead of this one. If it's truly bearish, same thing. You should use the first one and not the second one. So now that you have your expansion to the downside, you continue and you wait for this low to be tagged. And here's Friday midnight open. Over here it's 1 o'clock. Let's see what we get by 4. Okay, before 4 you already start this place into the downside. See what we get. Continuation. Pretty large move. 4 o'clock is right here. And market closed. There you go. Boom. Now you're in 4.5. So you can decide to kill the trade there or literally wait for this low to be rated all the way here. Now you remember something, you have on Friday you have option expirations. So do you actually really want to trade that, or do you want to probably save capital? Definitely Friday, Friday it's gonna be bearish. Have that in mind because of the profile, but do you actually want to risk Friday? Probably not. You can still trade it. Yeah, so let's get all the way to midnight, see what happened there. Boom, midnight open, price is 15602 even. um Midnight open, boom, then 2 in the morning, see what we get up to there. Okay, you retraced. Now 5 in the morning, you created a high. Where are you compared to this range? Well, fair value gap on the left. Where is 930? Right here. You created a higher high. This high is targeting this Bicep inefficiency, this CV. On the hourly, you're right at this imbalance right here, and from there you can just literally target the sell side. And that'll be the recap. Thank you for watching. Bye bye.